Hi everyone, let's go over my highest probability local Elliott wave scenario on Bitcoin. Here we are looking for a finished impulsive structure to the downside, 1, 2, 3, 4, 5, labeled as a wave A or 1, looking for a bigger 3-wave corrective structure to the upside in B or 2, and then a continuation to the downside to take the local low. Now the probabilities are higher for price to sooner or later take out this low, and that is because of the 3-wave structure we have to the upside. If we really want to change market structure and look for continuation back towards the upside, we actually wanted to see an impulse 1, 2, 3, 4, 5-wave structure. That is not what we got. We very much got a 3-wave structure to the upside. What is also interesting about this 3-wave structure to the upside is that the high was made on the highest amount of volume in the local trend towards the upside. Now, if we think about impulsive structures, we look for 1, 2, 3, 4, 5, and most commonly the highest amount of volume is in your wave 3, then you get a 4 and another 5 to the upside, making a higher high on a lower amount of volume. In this case, we never got a wave 4 and a 5. 1, 2, 3, 4, 5. We never got 4, we never got 5. Higher probabilities, this is a 3-wave structure, which therefore automatically increases the general probabilities for price to sooner or later take out this low. Now what you can also see is that I have vertical lines on my chart, and this is a Fib time taken from the start to the end of A or 1. You can see that this high so far has been made before the 0.382 Fib time. Now, if that high is the end of B or 2, it is a very short wave B or a very short wave 2. It is most common for a corrective structure to finish after the 0.382. So the fact that we made this high before the 0.382 does increase the probabilities that we are not yet finished with a sideways corrective structure in B or 2 and only look for a C or a potential 3 to the downside at a later stage. Now, I also recognize that the weekend is coming up, and commonly during the weekend price is ranging sideways, so that might actually be quite interesting. And the 1.618 Fib time, which is still very much possible for a wave B or a wave 2, is actually on a Monday. And of course then the markets are open, so it is absolutely no problem to range sideways here during the weekend and then next week get that leg towards the downside in a wave C or 3. So we already now covered two types of probabilities. General probabilities, higher to sooner or later take out this low, plus because of time, how short this 3-wave corrective structure to the upside is compared to this wave A or 1 to the downside, the probabilities are higher to continue ranging sideways, and that is some interesting information to have. Now, the boundaries of the sideways movement would preferably happen between the daily naked point of control and the daily. Those are two nice areas of support and resistance, relatively close to price as well, 57.5k, 61.7k, and then in the middle here we have a bit of resistance above us, 60k to 60.4k. Now, if you pass the daily naked point of control, right, you see a blue box here, 63.6k to 64.3k in validation for this scenario. Of course, the high at 65k, and to the downside we do have some support here, 54.6 to 55.2k, but preferably again we are looking for a more sideways structure, and the boundaries daily naked point of control daily therefore are interesting. Now, because of the 3-wave nature to the upside here, potential for an ABC zigzag or a WXY double zigzag doesn't really matter. It does open up the door for different Elliott wave corrective scenarios. You can have a flat in an A, B, C. You can have a bigger triangle structure, not in a wave 2, so that is then a wave B. You can have a WXY structure, so it is too early to call the exact structure that we are looking for, but the probabilities are higher to look for a sideways range and higher to sooner or later take out the low. Now, what is interesting as well is that a price moved towards the downside locally as you can clearly see. And if you pull a fib from the high here to the low, which is a potentially finished 5-wave 1, 2, 3, 4, 5 impulsive structure, and then you want to see a corrective structure to the upside, so far this move here has not even retraced to the 382, which generally is a minimum target for any structure. If you're looking for 1, 2, 3, ABC, WXY, doesn't really matter. And the 05 to the 786 is a common target area for a corrective structure, right? So you can see the 05 is in confluence with the value area high, a volume profile of this part of the chart here. And actually just above the value area high, you then also have the golden pocket in confluence with an order block here. So that is the resistance that we have above us. That's the resistance inside the target box. So something that I will be looking for today or even beginning of the weekend, but it would be a move towards the upside to also move into these fibs over here and then observe the reaction at the resistance, the 05, as well as the golden pocket would be the more important local areas of resistance. Now, something that is not Elliott wave related, but actually is quite funny, is the base channel here. Now, a base channel actually is Elliott wave related, and in a base channel, what you want to see, taken from the start of an impulse to the end of a wave 2 to the end of wave 1, is a wave 3 to break out of the base channel, which we got here, 1, 2, and then 3. You want a wave 4 to move back to the base channel, and 5 to then reject and then take the low of your 3, right? So pretty much textbook. Eventually, price moves to the upside, hits the upper line of the base channel, right? That's not something we like to see if we're looking for still a wave 4. So it increases the probabilities we have a finished move here. However, after we made the high and price moved down, you can see we are now ranging on top of the base channel. Now, this doesn't have any meaning from an Elliott wave point of view, and generally I don't use any trend lines or channels in such a way, but I happen to still have the folder in my object tree here. I opened the folder and I saw price grinding on top of the channel, which I think was interesting to share. I don't know, maybe you use channels, maybe you use trend lines, whatever. Doesn't really have any meaning in particular, but I do think it is quite interesting. Also with the thought that we haven't yet retraced back into the fibs. So something that I would like to see preferably is of course price then changing some market structure locally and see some nice bullish CVDs to move back into the fibs, right? So that is also, from a probabilities perspective, something that I will be looking for. Now, if we look at the CVD divergences, bearish CVD divergences we had over here as well as over here, both of these have played out. And of course, for the bulls, we want to see bullish CVD divergences. I don't care about any CVD divergences we may have over here. I want to see new, fresh CVD divergences, bearish or bullish, and then use that information in my trading. We also have news today. I make sure to be live during that moment. 2:30 p.m. is Central European time here, Friday, August 30. High impact news. Make sure you trade safe around that hour, and I will make sure to be live at that time. So if we then look at the probabilities of the different scenarios, then the probabilities, first of all, generally are higher to sooner or later at the moment take out this low. But as explained, because of time, the probabilities are also higher to create a bigger sideways range to finish a wave 2 or B, at least a sideways structure, after the 382 fib time, right? So there's potential to move sideways during the whole weekend. Looking for a range between the daily and the daily naked point of control would be a nice boundary, right? And then on the number 3 spot, we are looking for a bounce towards the upside now. If you take a fib from the high to the low after a potential here 1, 2, 3, 4, 5 wave impulsive structure, you actually like to see price move back into the fibs, the 382, this one over here, right? 382 to the 786 is a nice area of interest. We have the 05 in confluence with the value area high at about 59.9, and then over here, of course, the golden pocket with an order block as well as a daily naked point of control. By the way, that is this one, 60.1k, just below the golden pocket. But something that I'll be keeping an eye on, and something that I mentioned here in the probabilities, is looking for a bounce to the upside to move into the fibs, because it is very rare for a structure to not at least move back to a 382 and look for a reaction there. And of course, the longer we start ranging here, the higher the probabilities we have a finished structure to the downside and look for a bounce to the upside. And we can count a potential finished 5-wave structure here, which means that preferably we do see some sort of a move to the upside. We have some support here locally, value area low. So that is something I'll be keeping an eye on. And as mentioned, what I then like to see as well is price to find some support, maybe flip some levels, resistance back into support with some bullish CVDs, and then look for price to move to the upside. The 0.5 to the golden pocket area is an interesting area of resistance, and that is where we then can observe what price does. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.